Did we just witness the exact moment the silver rocket ran out of fuel? Welcome, thinkers, to Currency Tea. What you're about to see is a forensic breakdown of a market event that will be studied for years, not just in silver, but across the entire precious metals complex. In a single trading session, we saw a surge so violent it defied belief, followed by a reversal so sharp it left charts bleeding. The question on every investor's mind is brutally simple. Was that it? Is the historic 9-month moonshot in metals finally over? Or was this just a monstrous shakeout before the next leg higher? By the end of this deep dive, you will have the framework to decide for yourself. This isn't about fear-mongering or hype. This is about reading the language of the market itself, the language of price, volume, and pattern. We're going to dissect this day candle by candle, trend line by trend line, across 4 key metals: silver, gold, platinum, and palladium. We will separate the technical signals from the market noise, and I'll show you the one single chart formation that, if it completes by the closing bell, could lock in a top with frightening statistical odds. But first, we need to understand the scale of what happened. Let's orient ourselves. Here's a daily chart for silver. Look at this profile. For months, it's been a virtually uninterrupted climb, a parabola that has left even the most bullish analysts breathless. And then today, this. A candle with a wick so long it stretches into the stratosphere. Price screamed higher, tapped a level just above $117.80, and then collapsed. It gave back a huge portion of those gains in a matter of hours. Yet astonishingly, as of this moment, it's still up a staggering 7.5% on the day. That's the kind of volatility that marks inflection points. That's the kind of day that creates legends and ruins portfolios. So how do we process this? We start with the most powerful reversal pattern a technician knows, the topping tail. Act 1. The anatomy of a signal. Is this a topping tail? A topping tail isn't just any down day. It's a specific story told by the candle. It says, buyers rushed in with insane enthusiasm, pushed price to a new extreme, but then sellers overwhelmed them completely by the close, trapping the latecomers. The key to the pattern is the close. For a true high-probability topping tail, the closing price must be in the lower 25% of the candle's total range for the day. Let's apply that here, right now. The intraday high was near $117.80. The low, let's say, around $107.50. That's our total range. The lower 25% of that range is a band near the bottom. To confirm a textbook topping tail, silver needs to close within that band. As I'm speaking, we're trading around $108.90. We're hovering just above that critical zone. We're in the probation period. The jury is still out. If we close within that band, the signal fires. It becomes a bright, flashing alert on every technician's screen. It doesn't mean the market can't go up again tomorrow. Markets can do anything, but it shifts the probability heavily towards a near-term peak. It tells us the buying frenzy exhausted itself, at least for now. But here's the first twist. What if we don't close in that 25%? What if we settle here, in the middle or lower third? Then this becomes something else. A warning shot, not a cannon blast. It shows seller dominance, but not total capitulation. It would suggest a pullback, maybe a consolidation, but leave the door open for another attempt higher. This is why we don't trade in a vacuum. We need more evidence. We need confluence. And that leads us to our second act, the hidden roadmap that's been guiding this rally for decades. Act 2, the logarithmic line in the sand. On a normal linear chart, this rally looks like a vertical line. There's no sensible trend line to draw. It's pure momentum. So we've switched our perspective. We go logarithmic. Logarithmic scaling measures percentage moves, not dollar moves. It's how you find order in parabolic chaos. When we look at silver through this lens, something extraordinary appears. If we take the two most iconic peaks in modern silver history, the 1974 hunt and the 2011 frenzy, and connect them with a simple line, that line extends right into today's price action. And guess where today's intraday high kissed? Almost precisely on that decades-long trend line. This is no coincidence. This is a major multi-decade resistance level. It's a wall built by market history. Now, a wall can be broken, but breaking it usually requires more than one charge. Today, silver charged the wall, was repelled, and fell back. That is significant. But remember, our rule is one piece of evidence is a clue. Two pieces are a case. A reversal at a historic logarithmic trend line is clue number 1. A confirmed topping tail candle would be clue number 2. If we get both by the close, the pace for a major top becomes very, very strong. This is the framework, but the metals market isn't a solo act, it's an orchestra, and the other instruments, gold, platinum, and palladium, are now playing their parts. What are they telling us? The story gets even more compelling when we listen, because right now, gold is painting a picture of perfect technical containment, and platinum may have already given us the answer. Act 3. The corroborating chorus. Gold, platinum, and palladium. Silver might be the wild child, but gold is the steady anger. And right now, gold is showing us what a mature trend under pressure looks like. For a month, gold has been moving within this well-defined parallel upward channel. It's been a thing of beauty, a predictable pinball game. It touches the top trend line, reacts down. Finds support at the bottom trend line, bounces up. This is controlled institutional movement. Now look here. Recently, price did something critical. It pierced the top of this channel. It made a new high above $5,000. Many celebrated a breakout, but in technical analysis, a breakout must be confirmed. It must hold. And what happened immediately after? A swift rejection, a reversal. Price is now back inside the channel. This isn't a breakout. This is a false breakout or an exhaustion tag. This is a classic sign of a trend testing its extreme limits. The momentum pushed it through the roof, but sustaining it there was impossible. It's like stretching an elastic band too far. It snaps back. Gold is now telling us the upper boundary of this multi-month rally is likely here at this channel's top. The probable path from here, a pullback towards the lower boundary of that channel, which sits significantly lower. That's not a crash prediction. That's a recalibration within an ongoing trend, unless that lower boundary breaks, but that's a story for another video. Now let's turn up the volume on the confirmation. Platinum, often the quiet one. Not today. Look at this daily candle. This is a textbook topping tail. The close is decisively in the lower 25%. It's negative on the day. It didn't even need to touch a major historical trend line to do this. It formed this reversal pattern on its own momentum. This is a self-contained warning signal. It's saying the buying here is exhausted for now. But, and this is crucial, without a second major factor like a trendline confluence, the signal is moderate. It suggests a pullback, a cool down, not necessarily a cycle-ending top. It's the market taking a breather. Now for the most damning evidence of the day. Palladium. Look at this artistry. This is what every technician dreams at a potential top. A massive vertical run-up, and then a single daily candle with an enormous upper wick and a close hammered into the very bottom of its range. This isn't just a topping tail. This is a shooting star of epic proportions. It's a near-perfect reversal candle. Palladium isn't suggesting a top. Based on this candle alone, it's screaming it. So let's tally the evidence from the course. Gold, false breakout at parallel channel resistance, suggests pullback. Platinum, clean topping tail, suggests exhaustion and pullback. Palladium, picture perfect high probability reversal candle, suggests a significant top. This is no longer about one metal. This is a sector-wide message. The momentum that lifted all these boats simultaneously is facing a unified wave of selling pressure. But here's where we separate the technicians from the gamblers, because all of this beautiful, logical analysis runs headlong into the most powerful and unpredictable force in finance: human psychology. You can have all the topping tails and trend lines in the world. They give you a probabilistic edge. They say, historically, when condition A and B align, price goes down 70% of the time. But they never ever guarantee 100%. The missing variable is the immeasurable, visceral energy of the crowd, the FOMO, the euphoria, the mania. I have been wrong at potential tops before. We all have. Why? Because gravity can be defied for far longer than seems rational. When a market enters a true mania phase, as silver seems to be, logic is a spectator. The gung-ho investor, the one levering up on margin, the one driven by a story of dollar collapse and permanent scarcity. That investor doesn't care about a 25% closing level. They only see the moon. We trade probabilities, not prophecies. The chart gives us the odds. The crowd writes the story. Our job is not to predict. Our job is to assess odds and manage risk. The technical setup we've outlined today raises the odds of a top significantly. It tells us the risk of being long here is very high. It tells us to tighten stops, take partial profits, and prepare for volatility. It does not tell us to go all in short because the crowd's momentum could reignite tomorrow on a fresh headline. That's the dance. So where does this leave us? Let's synthesize. Final act, the verdict and your watch list. Based on the evidence as of this moment, here is the layered conclusion. For palladium, the top is most likely in. The signal is the strongest. Further downside is the highest probability path. For platinum and gold, a meaningful pullback is the highest probability path. For gold, target the lower parallel channel. For platinum, a retracement of this last leg up. For silver, the decision point. It all comes down to the daily close, the final print. Scenario A, bearish confluence. Silver closes in the lower 25% of today's range, confirming the topping tail. This, combined with a hit on the logarithmic trend line, creates a powerful two-factor sell signal. The probability of a major near-term peak shifts to high. Scenario B, bullish reprieve. Silver claws back and closes in the middle or upper part of the range. The topping tail is invalidated. The trend line was merely tested. This opens the door for a consolidation period before the next attempt higher. The mania gets a stay of execution. This is your watch list for the next 24 to 48 hours. Watch the close, then watch the follow-through. A true reversal is confirmed by the next candle closing lower. A failed reversal is exposed by a quick recovery. In vertical markets, gravity is remembered, not repealed. What we witness today is a market remembering gravity. Whether it submits to it fully is what we must discover. Today was more than a price move. It was a signature, a footprint of a climax. These events, the dot-com bust, the 2008 oil spike, the 2011 silver top, the GameStop saga, they leave a specific emotional and technical signature. This isn't just a price move, it's a footprint of collective fear and greed. And we are seeing that signature form right now in the metals. For the Currency T community, our takeaway is this: respect the signals, honor the probabilities, but never underestimate the madness of crowds. Your strategy now should be one of defense, patience, and keen observation. The story isn't over, it's entering its most critical chapter. If this deep dive into market inflection points brought you clarity, if it helped you navigate the volatility ahead, then do this one thing for the channel. Like this video. That like button is the strongest signal you can send that its content matters. It helps Currency T grow and continue providing this level of analysis. And of course, subscribe for more. I want to leave you with a question, which I've also pinned in the comments below. Based on what we've broken down, do you think the top is in? Let me know your votes. Thank you for thinking deeply with me. Until next time, stay vigilant and manage your risk.